Make sure y'all got the recording. And we are recording. Cool, cool. So let's start over. So you're going to come to your screen. You're going to go zoom out 3 times, or all the way out till it's gray, and hit it 3 times, 2, 3. So you can see your candles, okay? Then you're going to go with the candle pattern. Right click on properties. You're going to take the bull candle, which is the bullish, the upward momentum, when the market's moving up, and change it to lime green. You're going to go to the bear candle, which is when the market's moving down, and change it to red, okay? You click OK. Hit right click again and click grid off. Okay, now we have what I call a bear chart. We're not going to go over EMAs today or anything like that. So basically what this is a naked chart, okay? Now what you can do is you can right click on the screen, hit template, and go to save template. And then you can save it for wherever it is. You can, I'll just put plain chart. Hit save. Now when you open up a pair, this is the Australian dollar versus US dollars. You're gonna hit template and find where you saved it. Mine's right here, plain chart, and here we go. So what I'm gonna be showing you today is one of the things that I consider to be the most important part. 1 second, guys. One of our guys inside the group is trying to get in. There we go. So what I consider to be one of the most important parts of trading, support and resistance. A lot of people struggle with support and resistance, and I did too at first, until I understood what support and resistance was and why it's so important. So when you've got your plain chart up, okay, we're going to zoom out. So after we zoom all the way out, we're going to go in twice. Okay, then you're going to click. I always go, so I do from what they call a top-down approach. I always start on the weekly chart. Then I unclick this green triangle and click over. Okay, now what I'm looking for with support and resistance is places where the market has previously come to and struggled to break price. Okay, so just right off the top, I can see right here. Okay, you're going to hit your horizontal line. I change it to red. Yours may not be red, but what you're going to do is if you double click on this line, you'll see a box pop up right here on each side, okay? That means that you can edit it. Right click, go to horizontal line properties, common, and you can change the colors and the thickness of the line. For me, I'm looking for major support areas and resistance areas. So I go to the second line down and I change it to red and click OK. Then to drag it, you just double click until the boxes pop up and you bring it down. So once again, what I said was I'm looking for areas in the market where price has come to and struggled to break. So right off the bat, I can see right here in this area, okay, we can see it came to here, okay, went up, struggled, bounced down. Once again, it came here, went up, struggled, reversed. And again here. This to me indicates a major area of support. Now, you may be asking, why is this important, Riley? That's resistance. Why is this area of resistance important to me? How does this help me trade? Well, because basically what this shows me, looking at it from a trader's eyes, is that these are areas that I can start taking potential trades from. Like I said, we're not going to get into trading strategies today. We're not going to get into entries and exits. This is just basically showing you some of the key things to what I consider being successful and winning when it comes to trading, or increasing your odds of winning. Okay, so now I want to find another area of resistance. I want to trap the market. Okay, so you can see once again right here, the market came down, struggled with price here, came back up. Struggled with price here, came back up. Now we've done what I call, and a lot of other people call, trap the market. The market's basically been ranging in this big zone right here, okay? Now what I do when I found the major areas of support and resistance on the weekly chart, I come down to the daily chart and I get closer to actual price. Okay, so you can see right now price is actually, no, this is a live chart, guys. The markets are open right now. You can see price is actually struggling at this area that we just marked on the weekly chart. Okay, we couldn't even see price over here at the time. We were going back in time, back to March of 2016. But you can see, it just proves my point that now when we go to current price in the current time, today, price is still struggling at this point. Okay. Now there's horizontal support and resistance. Okay, and then there's what we call trend lines. Okay, so let me go and take these off here, and I'll kind of explain trend lines. So once again, I'm going to click this to bring price over, and what we're looking for is the overall direction of the market. So right now, you can see it's a downward momentum. It's kind of ranging, and now once again, we're in another downward momentum. Okay, so I'm going to go to the daily chart and look for areas. And I'm going to grab my trend line tool right here. Okay, if you don't see these tools, which you should, all you're going to do is you're going to right click and go to customize, and whatever tools that you need that are over here, you just simply click on it and hit insert and then close, and it will bring it up here into your little toolbox, so to say. So we've gone over support and resistance horizontal, which is going from the left to the right of your chart in a straight line. Now we're going to cover what is called trend lines. And trend lines serve as a angled area of support and resistance where the market has come to and struggled as well. Because the market's either going up, down, or sideways. Okay, I don't really like to trade sideways markets. I like to trade with the trend. You may have heard the cliche phrase, the trend is your friend. I know it's probably cliche, but it's the truth. It's easier to trade with the trend than it is to trade against the trend. So right now, we can see that we are obviously in a downward market. Anybody who, even if you've never traded before, you can ask anybody, hey, where does this look like it's going, up or down? And they're going to say down. So one important thing about trend lines is that you are going to, let me see, there's people in the chat. Yes, it is. I see it. I see money. You guys following along? If you guys got any questions, go ahead and feel free to put them in the chat box. I want to make this as educational as I can for you guys. I want to make sure that I'm touching on areas that maybe you guys have been trading for a while and you've struggled and you just need to have some questions. Feel free to put them in the chat and I'll get to them. I'll put the chat up. I actually got it pulled up. I'll put it over to the side of my screen so I can see you guys, okay? So one thing I want to make very clear about trend lines, okay? I've seen people do trend lines like this. I've seen people do trend lines like this. These are wrong. These are not trend lines. I'm not sure what these are, but I've been guilty of doing this myself when I first started because, once again, I went off and thought I knew everything. I still learn daily. I still have mentors. Right now, I still have mentors in Forex that are teaching me new things to make me more valuable to you guys, to make me more valuable to people that are wanting to learn. So one thing I want to show you about trend lines, let me zoom in here. If you're going to draw a trend line, you need 2 valid points of contact for that trend line to be active. Okay, so what I mean by that is if I start here, let's say I start here and I go like this. Okay, this is not a valid trend line. You may say, hey, well, the market struggled here, Riley, and the market struggled here, and it struggled here, and struggling here. And let me tell you why, because you can see our first point of contact was here, correct? Oh, looks like I need a tool. So our first point of contact was here. Okay, we can see that clearly. Now my second point of contact is right here. You see this little candlestick? Let's see if I can zoom in. Oh, too far out. So you can see right here is our second point of contact. Now why this makes this an invalid trend line is because you see this wick right here. Okay, this wick broke through that trend line before we had our second point of contact. Okay, you need to have 2 valid points of contact without any other wick or candle body breaking through your trend line. Okay, so let me show you a valid trend line and then explain why I believe they're one of the most powerful things when trading. So if I start here, I want to go catch this downward momentum. This is a valid trend line. And you may say, why? Well, we have our first point of contact here. Okay. Then we have our second point of contact here. That is what makes our trend line a valid trend line. Okay, you can even go, some people say you can go like this. Okay, now we have 3 points of contact. Don't worry about this. This is a forecasting right here, okay? Now, if we go to the current market, let's see if we can find some support and resistance. Then I'm going to do a little quiz on you guys and see who's been paying attention. So let me pull this chat up real quick and see if we got any questions. Kareem, yes, should connect to first points. Correct. Joel, yeah, I'm guilty of that in my earlier days. Yeah, brother, I think everybody is. You know, you don't know what you don't know, right? You don't know what you don't know. Okay, so let's find the current market and let's see where we're at. So here's the current market. Now, let's find some support and resistance. Well, I can see right here, we're at a clear point of support where the market has come down. The way I look at support is like this. When you're sitting on a chair, you're being supported by the chair on the ground, and the chair is being supported by the ground, correct? So support is always at the bottom of the market. Now, resistance, if you were to be in a little short box and try to put your hand up on the ceiling and push through, and you can't, that's because you're being resisted by the ceiling. So you can look at it like that as well. Support is the bottom, is the floor of the market. Resistance is the ceiling of the market. Does that make sense to everybody so far? Is everybody following along as far as support and resistance goes? Let me know in the chat, guys. Oh, man. Rob McCord says yes. Dan Grierson, kinda. He laughs. So here we are at the current market. We found an area of support, okay? Now, let's find some trend lines and see if I'm gonna draw a trend line, and you guys tell me if this is a valid trend line. Okay, I want you guys to tell me, is this considered, from what I've said, is this considered a valid trend line? Kareem, no. Raphael, no. Rob, no. Joseph, Rob says valid. Kimberly says no. Joseph says yes. Kimberly says no. Braxton says yeah. Okay, so the answer is Dolores says yes. Minis says no. Okay, so the answer, guys, is no. Okay, and let me show you why. Remember, you needed 2 points of contact before any body. So the body, if you guys aren't aware, the solid color of a candle is called the body. These little green lines are called wicks. And remember, a minute ago I said, for a trend line to be a valid trend line, you need 2 points of contact of the wicks without anything being intersected. So nothing can go through the trend line before 2 points are made. Okay, if I zoom in, you can see that just right here, this wick came through. Okay, we had a 0.1 here, a 0.2 here. Okay, so this is not a valid trend line. Okay, now let me go back to the current market, and draw another one. You guys tell me if this is a valid trend line. I might be trying to trick you, so pay close attention. Is this, from what you can see, guys, is this a valid trend line? Let me know in the chat. Yes, yes, yes. Kimberly, yes. Dolores, yes. Raphael, yes. Okay. Stone, oh yeah. That's awesome. This is fun. I'm so excited to be on here with you guys. This is cool. Let me know if you guys are enjoying this. Is this as fun for you as it is for me? If you guys are having fun, type 1 in the chat. 1, yes. Joe, yes. Raphael, yes. Stone, Kimberly, Dolores, Dane, yes. Kimberly, yes. Kareem, yes. Yoli, Santiago, yes. Cool, guys. Cool. I'm glad. I'm enjoying this too. This is fun for me. All right. So you're right. That is a valid trend line. Okay. Let's go ahead and zoom in on it and let's see why. So you can see we have 1, 2, 3, 4 points of contact. Okay. Now, oh, someone wrote on there. So you have 1, 2, 3, 4 points of contact, and not one candle broke through this trend line before our second point, which is arguably here or here. In my personal opinion, this is a little bit more advanced, but in my personal opinion, when I'm drawing a trend line, I have a second wick right here. Hey guys, could you, whoever's drawn on the computer, could you stop, please? Thank you. Joel, the red line at the bottom is a valid trend line. Yeah, there you go, Joe. So, in my opinion, if I was to be drawing this trend line, I personally wouldn't count this second wick as my second point. I would count this one. And the reason why, this is a little bit more advanced, but let me tell you why. The reason why is because the market, if I count this, I'm counting this as a second move. Okay, in my opinion, that's not a second move. Okay, what I look for is visible moves. So the market came down, the market came up. There's my second move. Okay, that's what I consider a valid point of a trend line. Okay, so the market came down, visibly came down, market visibly came back up. There's our third point. Okay, and now this is where we're going to start to get into the lower areas of trend lines, into what we call channels. And this is a little bit more than basic, but it's basic enough that you guys need to know this, because it is also support and resistance. Okay, when you're finding a channel, okay, so basically looking for, we have an upper trend line moving up, and then we want to find a lower trend line moving up as well. Okay, so let me ask you guys, is this a valid lower trend line? Is this trend line going right here? Is it valid? Yes, Raphael. No, Kimberly. Yes, Joseph. No, Minira. No, yes. Florida says no, the wick went through a little. Minnie says no. Okay, so let's see. We have 0.1, 0.2. Oh man, there we go. 0.2. Okay, now let's zoom in and see what we see. So we have 0.1, then we have 0.2. Okay, this to me indicates a valid trend. Okay, 0.1, 0.2. The wick didn't break through until here. So this to me is a valid trend. Now, there's some other, if you want to be more of a conservative trader, there are people out there that will say that you need 3 touches to validate a trend line. They're saying they can't hear me. There's no. Can you guys hear me? If you guys can hear me, type a 1 in the chat, please. There's someone saying they can't hear me. 1, 1. Okay. Okay. Loud and clear. 1, 1. Awesome. Awesome. Okay. I'm not sure what's Lindo cool. That guy, sorry. All right. Sorry about that. So some traders will say you need 3 touches to make a trend line valid. So you can see right here, we have 1 touch. Okay. We have 2 touches. And we have 3 touches. Okay, cool. Down here, we also have 1 touch, 2 touches, 3 touches. The market broke through a little bit, but came right back into our channel, okay? Now, basically what we've done here is instead of trapping the market going, let me zoom out a little bit. Instead of trapping the market going this way with our horizontal support and resistance, like this right here, the market ranged in this area, we've now trapped it in a upward movement, okay? And this is basically the same thing as support and resistance horizontally. You have your upper resistance and you have your lower support. Okay, you can see that it came down, it hit the trend line, it came up, bounced back down, was rejected and rejected until it finally broke through. And this is where you start to look for trades. This is something I'll talk more about on the Friday class. And so make sure you come to that class. We'll talk more about stuff like that. So before I move forward to showing you guys a couple of my favorite basic Forex patterns, go ahead and type in the chat if you guys have any questions about support and resistance, whether it be horizontal or the angle, I don't know what that word is, vertical, whatever, vertical up and down, but the trend line support and resistance channels. Before I move on at all. No questions? How am I feeling tonight, Joel? You asking me? Absolutely. A little nervous, you know, but I'm just focusing on making sure that these guys are getting the basics of what I believe is the important part of trading. Dolores. Okay, so Dolores had a good question. That's why I said about the third wick going through the line, so we just need to hit 2 wicks. Yes. Dolores, to answer your question, so let me see if I can find where we were again. I believe, Dolores, you were talking about this trend line right here, correct? Okay, cool. Yeah. So, Joe, I love you too, man. Miniru says, what is the criteria for picking up a support point and resistance point? One sec, Manira. Let me go over Dolores's question real quick. So yes, Dolores, you need two points of contact before an intersecting wick. So this would be point 1 and this would be point 2, but we want the wicks, okay? So if we were to do this, no, one sec. If we were to do this is only one point of contact, okay? We have our one point of contact here, and then we have our second point of contact here, but it's a wick that went through the trend line. So it invalidates the trend line, in my opinion. So does that answer your question? So you need 2 immediate points of contact before anything. Joel says, are you sure those 2 bottom red lines aren't valid trend lines? You know, Joel, let's see real quick. You know, that looks like it's a valid trend line, Joel. Yeah, that right there looks like a valid trend line. But if we had this, I don't think that'd be a valid trend line. So, Dolores, is it Dolores? Dolores, yes, Dolores. Does that answer your question? Let me know if that answered your question. Dolores, okay, cool. Yes, awesome. I'm glad, super glad. Now there's another question. What is the criteria for picking a support point and resistance point? Okay, Minira, I hope I'm saying that right. I'm so sorry, Miniru. Let me show you. So when I'm picking support and resistance lines, like I said, I trade from larger time frames. So I'm looking for major. I'm looking for major areas. Okay, so basically what you want to do. So there's a couple different ways I was taught. One of the ways I was taught, and I use both of them. One of the ways I was taught was you're trying to collect as many wicks in the same area as possible. Okay, so for instance, you can see right here, okay, in this area, we can move our line of support right here, and you can see that we're able 1, 2, 3, 4, 5, 6 wicks. Our resistance area able to come up here and catch 1, 2, 3, 4, almost 5. Okay. Also, in the past, if you look, the market came and we collected some more wicks. And if we go back, I'm sure that in the past as well, we collected more. There's some there, one there, there's a couple there. But the easiest way that I was taught by one of my mentors was when the market has come to a place 2 or more times and been rejected. So you can see right here where we just were, the market had come 3 times, once, down, twice, down, 3 times, and was rejected before it made its move down. So as a beginner trader, probably the easiest way that I was taught to find major areas of support and resistance is find somewhere that the market has come to 2 or more times and been rejected. So let's see if we can find some more real quick. So this to me wouldn't count as 2. And the reason why is because there's only a little bit of movement between. This right here, though, to me is very interesting because we had a large move up. Okay. It was hit and rejected. Hit again, rejected. Then we had a big move down, and then it fluctuated with a direction change. And it was hit and rejected again. That to me is a perfect criteria of a point of resistance. Okay. And you can see if you go to the future where we're at, it was rejected here. It was rejected here. It was rejected here, here. So that's a very large point of support. Now resistance is the exact same thing. Okay. Let me get all this out of here. When you're looking for resistance, it's the same thing. A place where the market has been rejected 2 or more times. So right here is a point of interest to me. Okay, we can see that the market had come, so we're looking for support right now. So you can see the market had come down. And something I want to tell you guys that is so important, I'm so glad I remembered this, about support resistance, guys. This is not an exact science, okay? These are zones, okay? So if it makes you feel better to, when you draw these lines, to maybe put like a box right here. I know a lot of people that do this. Okay. These are zones. I don't know why mine, you guys probably won't look like that. Mine. Okay, there you can kind of see my candles now. So these are zones, okay? This, you're not gonna, sometimes it will go to the exact pip, but if it helps you better to draw something like this, this is your zone, okay? This is your zone of support. The market came down, went into this zone, and was rejected. Came down, hit the zone, was rejected. Came down, got into our zone, rejected. Okay, came down to our zone, rejected. Down to our zone, rejected. So you're looking for areas where the market has come to 2 or more times and has been rejected. And one of the best things to do is look into the past. You can see right now, current price. Current price is here, but we're in our current area. It was in our zone, rejected. In our zone, rejected. Does that answer your question? Muniro, consolidation zone. Yeah, so yes, I get it. Okay. Cool. Thanks. Yeah, no problem. No problem. I'm glad you asked that question, guys. Any questions you guys have, please ask me, because I want to make sure, from what I understand, we'll be holding this class every Sunday at 9 p.m. Eastern. I'll be going over the same stuff over and over and over again in this class. Stefano, I'm really trying to get rid of those 2 lines. I don't know who drew them. Let me see if I can. Oh, there we go. So, cool. So now someone drew on it again. Guys, try not to draw on the screen if you could, please. Now we're going to go over. So before we go into a couple of my favorite patterns that you're going to want to know for, when we move into the more advanced sessions, is there any questions, guys, about support and resistance, the zones? Hey, Kareem, Stefano. Hey, I know who you guys are. What's up, man? Cool. Anyway, sorry, guys. Got a little excited. Some familiar faces. Someone just raised their hand. Corinne. Is it Corinne? Do you have a question? Thumbs up, Riley. Thank you, brother. It's good to see. I'm so glad to see you guys all here. Man, this is awesome. Okay, so no, it's like nobody. Oh, wait. Okay. Thank you, Kareem. Miniru, is it okay to pick the high of the day? Kazarian, when to enter a trade. So, like I said, in the basis class, we're not going to be going over entries, okay? Friday's class will be my weekly outlook, and that's where I'll be talking about where I'm looking to enter trades, where I'm looking to put, sell limits, buy limits, and things like that. So this class is basically for people, to show people the basics: support, resistance, channels, how to find support and resistance. Yes, Kazarian is ready for the next class. And I'm super happy to that too. Cool, man. Let's get some boosters going. Maniru, is it okay to pick the high of the day as a resistance point and the low of the day as a support point? So here's the deal with that. My style of trading, like I said, I start from the weekly chart and go down, okay? So if you were to do that, so let me get, just so I'm making sure. Oh, are you? Yes, Corinne, there will be recordings of these classes. I'm going to send them over to Joel, and he'll make sure they get uploaded somewhere into the group. Nancy, is there a way to practice this till Friday? Yeah, watch. I mean, guys, anything I'm teaching you, go practice it. Post the charts in the group, and you've got, just from some of the faces I've seen in here, you guys have some really good traders in here, not just myself, but other people. And we can critique you on your charts, you know, get some support and resistance marked up, some channels, and what the other things I'm going to show you, post them in the group, and just ask, hey, anybody got any advice on this chart? I marked up support and resistance, or hey, I marked up this channel, or I marked up this trend line. And guys, we're going to be more than willing to help everyone out. Like Joel said, this platform is going to be a life-changing event for so many people because we're here to educate you. It's not costing you anything. That's what's so freaking awesome about that. It's a blessing. So, sorry, I got okay. I get excited when I start talking about how this platform is free. Okay, Manu, is it okay to pick the high of the day as resistance point and the low of the day as support? Okay, so let's go to the daily chart. Let's see if we can. So if we were to go to the daily chart, each one of these candles. So another thing, guys, when you're on a chart, depending on the time frame, each candle represents the time frame you're on. Okay, so this would be the daily time frame. So every one of these candles counts as one full 24-hour period. So let's go to when the market closed right here, because this is the current market that's open. So if we were to take our horizontal line and we were to go at the high and we were to go at the low, okay, the way I trade, I would not do it this way simply because that's not enough movement for me to identify any type of entry, stop loss, take profit, because of the type of trade. I need more movement. Now, the only way I could see this being able to be done is to find your daily high, your daily low, and start going to lower time frames. Okay, but then even then, you're missing a lot of movement. Okay, the amount of pips that this is you're looking at, it's only 55 pips. Okay, you would start having to mark up support and resistance, trend lines and patterns inside of this area. So to me, I would say no. I would not use your daily high and your daily low as support and resistance in the style that I use, which I will go over more in the Friday class. Does that answer your question? Awesome. Anish, yes, Joel is going to figure that out. That is an amazing question. I'm so glad that you brought that up as well, because wow, that just opens up a whole nother opportunity to help even more people. Joe, I see you got that. That's freaking awesome. Manir, thank you for the illustration. No problem, no problem. And another class that's going to be coming up, guys, is a mindset class. I want you guys to just be aware that we'll get with Joel on, because like I said, psychology is one of the most important things of trading. You've got to understand the emotions that you're going to go through. And we'll be having a class on that as well in the near future, I assume. And with we'll also have another class with complete chart setups that you'll be seeing in the future. So before we move on to a couple of my favorite patterns, does anybody have any questions of support and resistance? Again, just before we move on, we got about another 15, 20 minutes that we can get through. Okay, so let's move on to one little thing. And before I end the session, I'll do a very quick recap on support, resistance, trend lines, valid trend lines, and what I'm about to show you right now, okay? Like I said, I'm gonna have this class every Sunday, so just keep coming back. And it's all about chart time. It's repetition. It's chart time, chart time, chart time. That's how you get better. It's just more chart time. Awesome, Joel. Awesome. Cool. So let me erase all this. Okay, so I'm going to show you a little inside of what some of my favorite patterns to trade. And you're actually going to watch me find these live right now. So I'm super excited to show you kind of. So one of my favorite patterns in the whole Forex world to trade is called a symmetrical triangle. To me, it's one of the most reliable charting patterns that you can find. And I want to make sure that you guys understand how to find them, because in my more advanced class on Wednesdays, Fridays, you're going to be seeing me look for these patterns a lot, and you're going to see how I trade them. So let's go to the weekly. This is how I always start, guys. Okay, I go to the weekly chart, and what I'm looking for. See if I can find one. See if I can find one in the past to show you. Bear with me. Yes, Joel. Yeah, so non-disclaimer, okay? Not saying these are guaranteed results, but what I'm about to show you is how we were able to profit. In total, we caught over 800 plus pips since January 1st to January 18th. Profit was close to 600 pips. So with what I'm just about to show you right now. So it works, but like I said, it doesn't guarantee future results or anything like that. Joel had put it in there, so I wanted to reiterate on that. Yeah. Yes, disclaimer, of course, blah, 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 blah. Yeah. All right, guys, let's get to it. Let's go to one of my favorite pairs. You know what? Let's go to Euro JPY. This is one that we caught 300 pips on. When I say me, I mean me and Dane, another one of the educators you guys will meet in the near future. We caught 300 pips in, Dane, was it 3 days? I think it was 3 days. So let's go ahead and go to plain chart. Go to the weekly. Okay, so, oh yeah, here it is. Yes, Dane, 3 days. Yeah, 300 plus pips in 3 days. So this was a big move, and I'm trying to find where it. This was a potential 1,600 pip move. It was pretty insane. Sorry, guys, I'm being quiet because I'm trying to figure out where our move was. I think I found it, though. There it is. Okay, so, sorry, it just took me a second. Yes, Joel, potential 1,600 pip move, and it's actually, okay, I know it's a basis class, but yes, God is good, no one be left out. Okay, so, guys, let me show you what I'm looking for. So, as you can see, if I draw a line right here, we have what they call a symmetrical triangle, okay? You can see the triangle. And when I'm looking for triangles, what I'm looking for is what I just showed you guys, okay? I'm looking for an upward and downward trend line that when they meet at the point, create a triangle. So you can see if I zoom in, have my point 1, have my point 2 with no intersecting wicks or bodies going through, okay? Need to move this one up a little bit. Okay, you can see right here, I have my point 1 and my point 2 with nothing intersecting until here. Now, when we saw this triangle, okay, Kazarian, you lost me there. Okay, where did I lose you, brother? Okay, sorry. I'll slow down a bit. So I get so excited about triangles. I mean, it's crazy how excited I get. Dane did tell me to go slow. The people need to learn this. Okay. A lot of stuff in the chat going on right now. Okay, yeah, you know what? I'll go with this strategy done consistently can provide financial freedom. Yes, it can, it really can. Okay, so when we came onto this chart, this is what we saw at first. Okay, I zoomed out all the way, came to my weekly chart, and went in 3. 1, 2, 3. Now, what I'm looking for when I'm looking for a triangle is basically this. I'm looking for a move up. I'm looking for a move down. So it kind of creates like an upside down V, as you can see right here, okay? So the market came down to a low point and went up, okay? And then shifted direction and created lower lows and lower highs, okay? What I mean by lower lows and lower highs is this. The move up created higher highs and higher lows. So here's our low, okay? We created another low, which was a higher low. We created another low, but it was a higher low. So we have a low, a higher low, a higher low. We have higher highs. So here was our high. Here is our higher high. Another high, which is higher. So basically what I'm getting at is you're looking for an obvious move up followed by an obvious move back down. And what that's doing is it's creating a wedge. Okay. I posted a picture in the group the other day about how to find these patterns and what they're called. So once again, what I'm looking for when we first came on this chart, this is what we saw. Okay, I'm looking for a move up. I'm looking for a move down, but it can't come all the way down. It can't come even to here, or else your triangle won't be able to complete because it'll already be way past the move. Okay, so once I find that, what I'm looking for now is my valid trend lines. I'm looking for a trend line that goes from the low point up to the high point of the current market. So when I find this triangle, I want to be as close to the move as possible. So we're going to start here at the low. We're going to hit our second wick, okay, like this. Now, remember, when we saw this, none of this was here yet, okay? None of this stuff was here. Of course, when I change it to black, it wants to be see-through. But if I change it to green, it's not see-through. Okay, so remember, none of this was here yet. This is all we had seen. Now I've got my valid trend line going from the low up. I've got my point 1 and my point 2. Now I have my lower part of my triangle. Okay. Now I'm looking for my downward trend line. I'm looking for the obvious change in direction is here. Okay. We came up, hit a point, and changed direction. Now instead of looking for higher highs and higher lows, I'm looking for the move that has the lower lows here, 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 and the lower highs here, here, and down here. Got a little breaks right there, but this is good because this is what's going to help us validate our point. Okay. So once again, our valid trend line. from the top to bottom. Start here. We have our trend line here. Now we want to keep bringing it up to make with our trend line being valid still until the points touch, like that. Okay, now we have our triangle. Is everybody following along right now? Make sure I don't lose nobody. Yes, Stefano, the triangle tool is, you know, I'm not huge into tools. I like to find things on my own, you know. But yes, there is a tool on here. Oh, shoot. What is that tool? Oh shit. One. Why is everybody typing one? Oh. Oh yeah. Forgot where everybody was typing one. Oh geez. So yeah, so everybody's following along so far, correct? Okay, cool. So now what we're looking for when we take this trade, okay, we're looking for the break of the triangle. Now, you may be asking, how do you know how far it's going to go? So here's the rule of thumb of triangles. What you want is you want the point of contact that can be brought straight down or straight up and touch the other trend line of the triangle. So this is a point of contact right here. However, I can't touch the triangle anywhere with this because it's clear over here, okay? There's no contact over here. So what I'm looking for is the point of the triangle that touches a wick on one of my trend lines and the first contact straight down into the triangle trend line. So it can't be here because there's no triangle trend line because our triangle started here. It can't be here. Once again, there's no triangle trend line to touch. So it's obviously got to be, this is our next point of contact. And look, boom, right there. Now we've touched the lower trend line of the triangle. So what you do is you take your little crosshairs here, and you go from here down, okay? And we have 1,745 pips. That is the rule of a triangle, okay? The distance this move should technically go from technical analysis is the length where your first point of contact, you're able to draw directly down or up and touch the trend line. So we have a 1,700 pip move. Now, when me and Dane saw this, this is where we were at. This wasn't here yet. Now, if I undo this, I'll show what we're waiting for. So we're on the weekly. Now, when I mark up my chart in the weekly, okay, I go down one time frame for my entries. Okay, so as you can see, what happened was the market came up, touched, went down, back up, consolidated, and right here, we had our break. Okay, so there's two ways you can enter this trade, the conservative way and the aggressive trade. I recommend the conservative way. Risk management is so important, guys. You got to understand, especially if you're a new trader, I recommend a demo account because you don't want to lose your own money. You guys work hard for your money. You work hard for your money. Ooh. Oh, sorry. I got caught up in a song. And so what you look for, here is the conservative way that I want all you guys who are just learning to trade to trade like, okay? In the more advanced class, I'll show you the more aggressive way to trade this. But so as the market comes down and approaches the bottom of your triangle, so we came down, we had a pullback. And this takes patience, you guys. This is why the mindset training you guys are going to experience later on is so important, is because this takes patience, okay? We're talking, this trade went from November, well, about December the beginning of December to almost the end of December before we finally got our breakout. So we have our moves going in the middle of this triangle. Now here's another rule. Okay, the closer the market gets to the center, yeah, I know, Dan, I know. The closer that the market gets to the corner, to the tip of your triangle, the more powerful this move is going to be. It's kind of like a spring. You think about it, like the beginning of the spring is clear back here. And as it gets closer, the spring gets more and more squished, okay? It gets closer and closer together until we have a breakout, and that's when it launches, okay? So this is what we're looking for. We're looking for this breakout right here. Now, what we're waiting for afterwards, after this breakout happens, we're waiting for the market to do just what it did right here. This was a crazy wick. We caught this whole move right here, but that's more of an aggressive style. We don't want to talk about that right now, but we will. Let's see. So we caught almost, maybe it was more than 300 pips. So what you're waiting for is market to break through like it did right here, and then you're waiting for the market to pull back and retest this bottom trend line. No retest, no entry. Remember this. No retest, no entry. This is the safest way to trade. And the reason why is because you're giving the market a chance to correct itself, okay? Now, there's other things we can go through here that we will go through in future source classes as far as Fibonacci's, the 50% and 61.8% retracements. But right now, I just want you guys to focus. I can solely trade off of this right here. Okay, I really can. I've done it and for over and over and over and over and over. You wait for the market to break. Okay. Once that market breaks, you patiently wait for the retest. Once it hits this retest, that is when you can enter the trade. Me personally, I wait for the retest and for the candle to close and a new one to open below this trend line, because you don't want to take it as soon as it hits this point. If you take it as soon as it hits this point, you risk the chance of this market going up and closing back inside this triangle. Well, now your lower level of support that was turned resistance now, if it closes inside the triangle, it's now becomes support again, and you risk it going back up. One thing that one of my mentors, I have a mentor named Mark Walton, who trades $1 million accounts. You want to talk about crazy stuff. This is what he always recommended to me. So this one came up to the pip, okay? You can see that it hit the trend line to the pip and then fell. We are currently awaiting another retest, but it fell 167 pips, guys. Mark. Oh, Joel knows Mark. Awesome. One thing that he told me was when he looks to enter a trade, so say we're waiting for this market has broken, we're waiting for it to come back and retest, okay? Mark talks about the market won't always come up and touch to the pip. So what he does is he goes to his trend line and say he's looking to enter at, another thing I want you guys to understand is whole numbers as well. So okay, so we have a whole number, 127000. In the Forex world, the main point that you want to get to is to see support, resistance, trend lines, and patterns that other traders around the world are seeing. Because the more confluence you have on your chart as other traders around the world have, the more likely your trade is to go in that direction. So whole numbers are huge psychological points for traders. So you can see 127000 has served as support here, resistance here, and I'm sure if we go back, resistance, support, okay? So that's another thing to look for is when you're trading is whole numbers. But say this trend line was to be at 12700, okay? Mark teaches to come down 10 pips, okay? So you take this tool. If you guys don't know how to use this tool, this is how you count pips. On this, so we're looking at 301 pips on this one, okay? That fourth digit on this one you take it off and you count the first three. It's different depending on the chart you're looking at. If you guys have questions about charts and pips, just let me know. So what you would do is you would come to this trend line, say we're waiting for it to retest here, okay? This is not financial advice. This is not a suggestion. This is just what I look at. I would measure down 10 pips right there. We have 12.8 pips, which is a 125, 128. Okay, so I would bring my line 125, 128. Go to parameters, 125, 128. Okay, and I would set my sell limit here. Okay, this is how I was taught as well, another way, more of a conservative way of trading. Yes, educational purposes only. So there's that triangle. You guys that want to talk more about this particular trade, hit me up in the group. We can, basically come to my advanced class, my more advanced class on Friday, where I'll actually be talking about this actual trade. But for now, let's go. We got a couple minutes left. Let's go to another pair real quick and see if we can find another triangle. Okay, Joe. I won't give away the farm. There's so much more. But that was just a little teaser. I'm sorry. So once again, right now I can see a triangle. I see a triangle already right now. So once again, we're looking for a move up. Oh, sorry. We have our move up. We have our move down, which is about center of our move up. Okay, we're about the middle point of our move up. Okay, now we're going to look for a valid bottom trend line and a valid top trend line. Now, one thing I want to tell you guys about this as well, the more steep the angle of the trend line, the less reliable it is. They're still reliable, but the steeper the trend line, the less reliable, okay? So let's find a valid. Okay, so there's another triangle. Okay, we have our 1, 2 points of contact, 3. 1, 2 points of contact, our triangle meets, okay? So let me ask you guys a question. You guys answer in the chat. What you guys saw before, I want to measure the distance that this triangle possibly go. Can I measure from here? Can I measure from the top down and find the amount of pips this triangle from technical analysis should go? From this point down, can I find the amount of pips that this triangle should go based on technical analysis? Flora says no. No. Anybody else? Okay, let me do something a little different here. A little bit better of a quiz. Okay, so this being point 1, point 2, point 3, point 4, point 5. You guys tell me in the chat, what point do I need to measure from Which one of these points do I need to measure from to find the amount of pips? Do I need to measure from point 1 down, 2 down, 3 up, 4 down, or 5 up? Dolores says 3 up. And Pi says 3 up. Brett says 3 up. Muniru says 3 up. Okay, you guys are right. Mario Bros. What? Oh. So you guys are right. 3 up. So I need to measure from here to here. Okay. So on this chart, we're on the hour chart. So the middle number says 579. Can you guys tell me how many pips 579 is? Now remember I said about the numbers in there. How many pips on the hour chart is 579? Raphael, 57 pips. Correct. 57 pips. Awesome. Awesome. Beginners class. You guys are pulling my leg. I didn't know that as a beginner. Free to 6-9. What? Joel, what are you talking about? 5796, whatever. I don't even know. Oh man. Yeah, we're gonna have so much fun in these sessions, guys. Oh, this is great. Raphael, way too much fun up in here. Kareem says yes. So Sean says, why not 1 to 3? Why don't we measure from here to here? Anybody see somebody put the answer in the chat? If nobody does, I'll tell them. I just want to see if anybody else knows the answer to that question. So Sean says, other than it looks like weird triangle. Yeah, this is, like I said, this isn't my ideal triangle. There's that better. I had it zoomed in. So this, yeah, exactly, Sean, exactly. If we were to draw a line from 1 to 3, it's a triangle, but it's not a forward-facing triangle like we're looking for. Okay, with forward-facing, I mean this being the main tip of the triangle. Okay, so we want a symmetrical triangle, which is this. This is a symmetrical triangle. And from what I've been taught, that's the main reason that we don't measure it in diagonally, is because it doesn't make a symmetrical triangle. A lot of these reasons, I don't know why the creators of these patterns made these rules up, but they did and they work. So does that answer your question, Sean? Let me know if that answers your question. I want to make sure I'm definitely okay. Cool. I just want to make sure I know what everybody's talking about here. Okay, so let me recap on support and resistance real quick and trendline channels, and then open up for a couple minutes for some questions, and then that'll be the end of the class. You guys, how'd I do for my first class, guys? Just be brutally honest with me. You guys think of my first class? Sean says, great. Thanks, man. Joel, thanks for taking your time and sharing it. No problem, brother. I told you, I'm getting every single class. I'm going to give my best. 1111111. Super great. Joel 111. Kimberly, awesome sauce. It's a lot of ones. Yoli, awesome. Thank you guys so much. Joel, thank you, thank you, thank you. So let's just recap real quick, guys. We're going to go in fast forward motion. Great. Okay, so we see a great refresher. Thank you, thank you. Yeah, for some of you guys, this is going to be a refresher. This is cool for me. How do we access the recording? Sean, I'll get it over to Joel, and Joel's going to post it in the new group that we have. I don't know if he's going to put it in the Telegram group or not, but word. Okay, so recap real quick, guys. Daily chart. This is how I set my charts. I'll click the green button, click the red button, zoom all the way out, click 3. 1, 2, 3. 1, 3, 2. Yeah, 3. Oh, sorry, 2. All the way out, 1, 2. Looking for support resistance zones on the monthly chart, okay? Make sure you pay attention. It's okay, I'm gonna go fast, but you guys can watch the replay. So we have came up, rejected, broke through, came up, rejected, came up, rejected. Okay, we have came down, rejected, which was support, support, resistance, 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 support. Remember, guys, these are zones, okay? Yeah, thank you. These are zones, okay? So remember, these are zones. If you want to create like a little zone box, okay? Create a little zone box for yourself. Okay, when the market came in the zone, broke out, in the zone, broke out, in the zone, broke back down, in the zone, broke out, okay? Oh, my screen messed up. What happened to my screen? Have you all seen my screen okay? Sean, yes, supply and demand. Yes, that I can go over that, yes. Yeah, I will, yeah. Like I said, in these, about now, you guys see the screen now? It's back, cool, cool. Okay, sorry guys. So, just gonna recap on support and resistance real quick, okay? Sorry, so sorry guys. So we're looking for areas the market has come to multiple times, have been rejected. So right here, we can see that it was rejected here, broke through, rejected in the zone, came down, up, rejected, rejected. So to me, that would be, like I said, on the weekly chart, you're not looking for a whole lot of support and resistance zones, okay? Just the main. Another one I can see, please don't tell me my messed up. Okay. So I got my horizontal support. Now I'm gonna look for a trend line. And right off the bat, I can see one. Okay. Remember, 2 points of contact. 1, 2, and then a breakthrough. So it's a valid trend line, okay? Got a channel as well. Okay, we're on the weekly. Now we move down to the daily. Looking for points where the market was rejected multiple times. We have another trend line. Respected until it broke through. So just real quick, guys, what are you looking for support and resistance? What's the main thing you're looking for support and resistance zones? Not trend lines, but support and resistance. Horizontal support and resistance. What's the main thing we're looking for? We're looking for our points of support and resistance. Okay, so support. You guys still hear me okay? Consolidation zone. Okay, so let's go to a new chart real quick. So support, we're looking for the places that the market, 2-point touching rejection to the highs and lows, point where the market goes up and down in quick succession. So what we're looking for support, we're looking for a place where the market has come to 2 or more times and been rejected. Okay, 2 or more times for support, which is the bottom of the market. So right here, we have a good area of support for right here. Market came once, was rejected. Twice, was rejected. Came down, consolidated, and we had our breakout. And then support turned resistance. Now resistance, the upper level, is we're looking for the same thing. The area where the market has come to, a zone that the market has come to 2 or more times and been rejected. So we can see 1, 2, support. Resistance turned support, came down, there's 3 times. Okay, so this is a good area of support and resistance. Now what these areas are, remember, they are areas that the market is most likely to come to and be rejected. So if price comes down to your support, it's most likely to go back up based on past. You can see this is a really good one. This the resistance that we found. 1, that up there. Okay, the market really struggled right here. Never really came down too far. That would be a good zone to put right kind of here. Okay, this little box will be your zone. This will be for right here. It's your support zone. Okay, down here was your resistance zone. The market really struggled right here, and at current market it did the same thing. Okay, same thing with support. You can make yourself a little support zone. Okay, market, I mean, you can see in the past, if we keep going back, every time the market came, except for a few times, it struggled. So support is the bottom. You're looking for the place where the market came down 1 or 2 more times and was rejected. Resistance, the market came up 1 or 2 or more times and was rejected. Okay, so that's support and resistance horizontal. Now our trend lines. What's the rule on trend lines, guys? What's the rule on trend lines? We're almost done. What's the rule on trend lines? Lucy says wick to wick. What do you mean wick to wick? You mean like wick to wick like this? Point 1 and 2 cannot cross through bodies or wicks. Sean, cool. Perfect. It's awesome. So, trend lines. This is a valid trend line. Why? Remember, point 1 of contact, point 2 of contact, where no wicks or bodies came through the trend line. This right here would not be a valid trend line. because your point 2 of contact is here, point 1 and point 2, your wicks. But in between those 2 points, we had 2 wicks bust through. And it's the same rule for lower trend lines. This is a valid trend line because you have point 1 and point 2, nothing breaking through. On an upward trend line, this is not a valid trend line. Point 1, point 2, your point 3 was the next one, had no wicks, but between point 1 and 3, you had a wick that came through. That invalidates your trend line. Okay, guys, so just that was a quick recap. Watch the recording. Sorry if I took up so much of your guys' time. I so appreciate you guys being on here with me and sticking it through. It's so good to see some familiar faces and names. Well, names from some other classes I've been in. If you guys had a good time, put a 1 in the chat. Let me know you guys had a good time. And if you guys are going to be on next week's, and if you guys are going to be on Friday's weekly outlook. Wednesday, actually, I believe this Wednesday I'll be doing a midweek outlook. I'll be going over trades that we're currently looking at, waiting for it to reach our area of the market. I'll also be going over correlating pairs and things like that. $9 p.m. Eastern. All my classes 9 p.m. Eastern. Sundays at 9 p.m. Eastern for Forex Basics. Wednesdays. So it should be going. Fridays will be 9 p.m. Eastern for the weekly outlook because the markets are closed and there's no movement. Wednesdays is the midweek update. 9 p.m. Eastern. I'll be going over current moves I'm watching and seeing where they're at and how far away we are from entry points. And then Sundays, 9 p.m. Eastern as well, Forex Basics. Guys, ladies, gentlemen, thank you so much for being on this hangout with me. Joel, thank you so much for the opportunity to be here to teach, the little bit that I do know to these people for free. You guys are awesome. Joel, you're awesome. Your vision's amazing. I support you 100%, brother, and I'm backing you 1,000,000% on this. Thank you guys for watching. Guys, it was so good seeing Kareem, Stefano, some of the other people from a couple of the other classes I've been in. I love you guys. I truly do. And I'm so humbled to be here with you guys and for you guys to be looking to me for some education. I will see you guys in the group. Let's stay active. Let's go and share this with everyone, guys. Let's make this the most amazing group. Let's be what Forex is. Okay, guys? I love you guys. Have a good night. I will see you Wednesday, 9 p.m. Eastern, the same pace. Peace and love.